We'll be live.
Boom.
Right. We're back. Ladies and gentlemen, hello, Internet. We're back again on a Tuesday evening with myself, Matt, Dan and Neil, and the money man, Mr. Dom. So good to be here, gentlemen. I think let's just do a bit of a February property market recap, shall we? Last day of the month.
Yeah, 100%.
That's
So,
mad. That's quick.
Oh yeah, I just realised that it's the last day of February already.
Yeah, crazy.
Long
Isn't it?
That means it's 5 weeks until we get paid again.
I was going to say, long gone are the days where it's like old payday. I have to log on and pay ourselves these days. But how's everyone's months been generally in the market?
Yeah, I think been a bit of a tale of two halves actually. I don't know if Neil would agree. We've had a couple of houses, well, quite a few actually, well, 3 or 4 or 5 maybe, a few in Shinfield, a couple in Lower Early that have gone on and absolutely flown out the door and still got great prices, asking or higher, which has been superb. I'm really happy with that. There's some great buyers there and prepared. So nothing changed in that respect. But I've had one that's gone re-available. So unfortunately fell through. There's been a couple of those here and there now. It feels like we've had more maybe not this year than last year, but certainly the current run rate, there'll be a few more than last year. And I think that's to do with maybe some nerves from people. I don't think it's realistic, but it is what it is. But the ones that have gone back available aren't getting the same level of interest as they were the first time round. So yeah, it's a bit of an odd one, but all in all, I think it's still been a very good February. It still feels very busy in that respect.
Yeah, I've seen the sales which you've had going on the last couple of weeks, and I think those type of family houses, those kind of moves are people doing it kind of regardless of whatever the headlines are saying. They need to move, and they're looking for that kind of property.
Yeah,
I've noticed there's a lot more people that are in a chain position or sold that have the opportunity to now buy, whereas before they were being pushed to one side and getting a bit fed up with it. I'm out to a lot of people now that I'm explaining to them the market now is probably better for you to be selling and moving within, whereas last year it was a lot trickier for anyone that was in a chain position or not in the strongest position to actually get to see a property, let alone have an offer accepted. So it's actually better for some people.
it's funny you say that. Actually, I've shown 2 people today a property that aren't yet on the market, but they're getting everything ready because they want to move. It's about finding the right place. So I think that might be more so what this year's about.
So it's probably actually better for both sides, isn't it? Just a calmer market. There's less chaos on both sides. The buyers have a bit more time to actually find the right property, and for sellers who just, like you say, still selling for the same prices, it's just not so chaotic.
Yeah, I've said the same to pretty much everyone that I go out and see now, and I think I mentioned it last time. Instead of having 20 viewings and 10 offers, you've got 10 viewings and 5 offers. So it's just not as, you bang on. It's not as chaotic, but properties are still selling, and they're still selling for a decent price.
Yeah. And in the mortgage world, Dom, my kind of perception from just looking at the mortgage market is things are kind of chilling now around 4%.
Yeah, they are stabilising. We had that sort of flurry of activity with some going below 4 for the lower loan to value deals. I was just checking the Sonia swaps, and they're sort of the 5-year time horizon. They're sort of settling at about 4% to swap a variable for a fix. And if you go back to the end of January, it was 3.5%. Which implies the market thinks the median's going to be around 4 over what the medium term, like the 5-year horizon. 10 years is still a bit cheaper, but most people don't want to tie in for 10 years. You just, you're a bit hamstrung with it. And if the market does turn back in your favour, you've got nowhere to go really. So yeah, I think it's a case of you might see the odd lender that wants to price aggressively to win a bit of business, but I think we are where we are now, and there might be the odd bit of good news now and again. But if you're wanting to do something, or you need to do something, and you're waiting for a miracle, back to, you know, sub 3%. It's not going to happen. It's not going to happen.
Can I ask a question? What's the Sonia swap? Who is Sonia? And what's she swap?
Sonia it stands for Sterling Overnight Index Average, right? And it's an index that measures the average rate at which money sterling is being lent between financial institutions over specific time horizons. So the simplest way I can describe it is where Bank A lends to Bank B it says, right, you can have this money at 4.14, and Bank B says, thank you very much, and we're going to loan that out at 4.5. So our margin is 0.5. Banks don't tend to, they do lend their own money, but a lot of the time they're raising money on the capital markets. So if you think that if you've got money in the bank, if you see a big number on a screen, it's probably not there. They just owe it to you. You know what I mean? If you did try and call it in, they'd have to go and get it. So it's that. It's quite complicated. So I won't go into the detail, but that's how it works. And it's obviously something we look at. We never used to have to look at it because interest rates never changed, right? but over the last 12 months, we've come back to normal with interest rates changing. So it's worth. If you're interested, we could do a session on that separately. But it does tell a story. And if you go back to February 22, so the swap rate over 5 years today is yesterday was 4.014. A year ago today, it was 1.523. So that just tells you why money lending is more expensive now than it was before. And that's not going to change unless you see marked reductions in the base rate. It won't ripple through into Sonia.
Right,
Random question, but well, sort of not random. Are there any banks out there or big banks that do mortgages that never use swap rates because they've got that much money in their bank and would therefore lend it at less or with something different? Is that a thing? Or is it? Well,
they'll lend they'll lend at a prevailing rate, right? But you know, a bank has to make return on the money it has. So if you get 4%, if you're a bank and you park your money with Bank of England, you get 4% return. That's what the base rate is. Yeah. So it's highly likely, unless it was, it would be an outlier, Dan, and they'd get mullered basically, and they wouldn't be able to cope with the demand. So it's very much driven by market forces rather than the odd organisation with deep pockets. You can see that in lifetime mortgages. These lifetime mortgages, which is the equity release side, the later life side of lending, that's dominated by big, very old financial institutions with very, very deep pockets and very, very big funds that they can invest, if you like. They don't go crazy. They're all commercial entities, and they'll lend at what they believe is to be a commercial level.
Interesting.
Yeah, so I guess you get kind of headline deals, don't you? You mentioned it before, Dom, where a lender will reduce a rate, get inundated with cases, and then have to pull that rate fairly quickly. So it kind of makes for a good headline, but it's not around for long. Yeah,
and that will keep happening basically. You know, as soon as because I'm sourcing every day, you can tell, like, the longer it goes on that a lender's sourcing cheapest over a specific loan to value, you know that's not going to last forever because they're just going to get mullered basically. For everybody that fits their criteria, there's an app going in, and they've got they'll just turn the tap back off, think, right, we've lent enough now, service is under pressure, we're just going to turn the tap off. And then you press the button again, and the next one that appears at the top is going to get mullered, and so the cycle continues basically. You know, we're always chasing after the best deals, and that's how they manage them.
Cool. Well, let me do a little screen share. I love a screen share. I don't know if you can see this, or I can zoom in here. This is from Zoopla, released today. Everyone can see it, right?
Yep.
Which shows down here we've got demand, we've got the number of sales agreed, flow of new supply, and stock for sale. So the purple is now versus a year ago. And then the black is now versus 2017 to 2019 average. So compared with last year, so demand is down, buyer demand is down, stock is up. Mm-hmm. Actually, looking at before COVID, what everyone's calling the normal years, stock is slightly down, demand is slightly up. So I'm looking at it and thinking, well, actually, we're just going back to normal. Everybody knows, interest rates now, it seems like it's stabilizing, as we said. The crazy times of the COVID boom are over, but it's definitely not the doom and gloom we were reading about a few months ago.
No, it certainly feels like that. It feels just like it was pre-pandemic. So we've gone through a 3-year crazy period, haven't we, pretty much? And we've settled down, it feels
I
like.
think the thing that's going to take people a while, we talked about this before, it's going to take them a while to get used to, is that interest rates are not rock bottom, and they won't be. We're back to the median as it was before financial crash. And I'm almost every day I'm having conversations with borrowers who have only ever known rock bottom rates since 2008 when the financial crash happened. So it's just going to take a while for people to get their head around that. That was not normal. You had it good while the going was good, and now is something affordable? Well, if the affordability rules allow it, yes, it is. Whether you want to afford it is another matter. If a lender's prepared to lend and it's responsible to lend it to you, that's fine. But if you decide it's not cheap enough, then you're not going to do it. But everyone's circumstances are different, and people will still get married, they'll still get divorced, they'll die, their landlord will sell up, and they've got to do something. Those life realities will still be there, won't they? Regardless of what the interest rates are doing.
Yeah, and the thing that I get when I speak to buyers, and we all have it when you speak to someone, they say, "Oh, I'm waiting for prices to come down." I always think, well, what exactly are you waiting for? A global financial meltdown, which I think is what some people perhaps hope for, but I just don't think the outlook is just not the same as it was in 2008. So I just think anyone who's kind of waiting for, I'm going to wait for house prices to fall off a cliff and then buy up, for that to happen, interest rates should have to go up so high. So your payments, you wouldn't be saving any money anyway. So
it's not going to happen either, like you said.
Yeah,
no chance. No chance.
I think you'd get a lot of people just chancing their arm and hoping, based on the news, that will be the case. Because I had a chap that viewed a property before it went online. He had the opportunity, based on the seller's circumstances, to get it at a good price, and I've just tied it up for £17,000 more than he could have got it for. So it just shows you that he was chancing his arm in terms of a low offer, or what he thought it was worth, should I say. And he's come in after it's gone on the market and paying a great price for it. So
yeah, I find it's almost the buyers who are prepared to get out in the market when things are bad, or the headlines are bad. They're the people who can maybe get a bit of a deal or negotiate more. But it's, we're not in the terrible times like people were predicting.
There's still competition out there, that's for sure.
Yeah,
I think one thing it leads into, though, which is important, is preparation still. So we're talking about the rates are different now, they're not going to change. For people to understand what that actually looks like, you need to prepare yourself and have a conversation to know what you're borrowing. Talk about a couple of live examples I've sent with Dom very recently. People want to view and buy a particular property, doing their mortgages, and they look like they're not going to be able to get them because their affordability isn't what they thought it would be, so didn't understand it. And one of them actually had some issues on a credit file. Didn't think it was a big thing, but actually will turn out to be probably the reason why they can't do anything for 6 months and miss out on the one they wanted. But if they were prepared already and had these conversations, they'd know when they can move, what they need to save, what their monthly payments would be. So it just goes back to you, doesn't it, Dom, and getting those things ready. Same thing.
It's exactly what we started out with when we first started these podcasts. Well, it was slap bang during COVID, wasn't it?
Yeah.
When lenders were being very cautious about who they lent to and all that kind of stuff. Arguably, it's as complicated now, if not more complicated than it was then. So the need to do that preparation is absolutely unbelievable. Maybe we should refresh that series, and just kind of pick an aspect a week and just talk about You know, if you're a first-time buyer or a home mover through necessity, and if you've not done it before, you haven't done it for a while. What do I need? How do I get my ducks in order? Because otherwise,
break it down.
Yeah, you know, you're in a market where there is less demand, if you like, but there's more properties. You know, we all need to be spending time where you know it's going to work out. We can't afford to sort of filter on the fly. There's always a bit of that, but yeah, I think maybe that's a good idea. Maybe we should revisit some of that stuff.
I think it's probably worth us obviously going through, like you said, the preparation side of it, and breaking it down for people. Just a point that I raised the other day with someone is they made an offer which was the same amount as someone else, but their mortgage advisor never came back to me to do my due diligence, whereas the other people's did. So I collated information, and he was saying, "Is there anything I can do?" And this was 24 hours after I tried chasing his advisor, and I still hadn't heard anything. So I did say, for future reference, you want to tell your advisor, look, if I'm making an offer on a property, you need to be going back to them and giving them the thumbs up, so to speak. So yeah, it's all okay. Preparation. It's
all about your budget. That's what I think is important, isn't it? You can potentially borrow whatever, but it's all about knowing what you want to spend every month. So that's the best thing I think you can do, Dom. If you say you want to spend X amount a month and all your bills, everything, you just work it out within that. Make an offer. But I think people are unaware of what it looks like.
So, should we do a session on affordability?
Are we going to get that again?
How's it calculated? How about we do a session on that?
I think I'd like to know. I know I did it recently with you, but I still don't really know. So you looked after everything for me. It was great, but it'd be good to know what it actually means.
We're about to do that dance as well, Dom, aren't we, with my mortgage this year? So I think
perhaps I'll do a demonstration. We'll do a screen share, and I'll demonstrate it exactly what the steps we have to go through to work out what someone's affordability looks like.
We could come up with two fictitious characters.
Completely.
A single 23-year-old person who wants to buy something, and a moving family.
Yeah, because there's differences between freehold and leasehold in terms of how those things are calculated, impact of credit commitments, that type of thing. So that's probably going to be a slightly longer session, I would say, or we break it up into chunks, basically.
I think let's do that. Would we be able to we could go through like an income and expenditure and just like how, very kind of rough overview of how things are looking, because it's such a good point about getting your mortgage in order before you go and view houses, because I know viewing houses is the fun bit, right? You want to get through the door, you want to go and look at houses, and the mortgage is the boring part. Sorry, Dom, but
you get to meet Dom.
Cool. So any other topics, guys? Mike's asked us for some end of month positives. I don't know if we've given many positives. We've certainly given some realism.
I'm flat out. I've got more inquiries than I can cope with, really. But
I was going to say, we had a chat, didn't we, Dom? You've been really busy, mate. You've been really busy. I can give some positives, some exciting stuff. So people who are watching this later, don't feel doom and gloom about the market. We've had some awesome sales and some really, really good offers, and still a lot of people out viewing. So it's really, really strong. And also, we've got some cracking houses. I've got one that's going to go live on Friday, which is just mega 3-bed semi with a big garden. It's going to be so popular. So keep your eyes peeled. Done a preview on it this evening. And I've got a beautiful house in one of the best locations in Shinfields, which will be available to start of next week. Filming it on Thursday. It's around 3,000 square foot of property in a great spot. Neil knows it's such a good location. So this one's going to be very popular too. So some cool stuff happening. It's all good.
Oh, good. This is the one we're filming on Thursday.
We're filming Thursday. We're going to get that drone out. We're going to make the sexiest video tour you've ever seen. So yeah, be dressed smart. We're going to be on fire. We've got to come up with a movie script for this bad boy.
You don't need a movie script. One take wonder.
Oh, I'm just going to waffle from start to finish and just make it up, but fun.
Sorry, Neil. Carry on.
I was going to say, there's definitely some nice new stock coming on. I've got three or four listings. Watch this space coming on in the next few days. So yeah, it's going to be popping. Still business to be had. Houses to be sold.
It's all going on. It's all going on. Cool. All right, chaps. Well, we're going to keep these to 20 minutes. So should we log off and thank everyone for watching, and then we'll be back next Tuesday.
See
Look
you
forward
then.
to it.
Peace and love. Bye-bye.
See you guys.